Most traders don't actually have a bad strategy, they just have bad entries. And it's not because you don't know enough patterns or indicators to apply in your strategy, it's just because you're missing one simple structure that makes an entry clear, consistent, and repeatable over time. Over the past 3 months, I have over 85% win rate in NY session trading this exact 5-minute entry that I'm about to explain to you today. I'm also going to show you exactly how to apply it so you don't need to add any fancy indicators or complex concepts, but just follow something structured that you'll be able to instantly apply and just get better at. And with 5 years of experience, I've come up with something that is extremely effective for me. So enjoy this video and let's get into it. So number one thing you're going to do is you're going to come to a blank chart of your choice. Now for this, I probably have titled it 5 minutes. So if you're trading a more volume-based asset like NASDAQ, a US 30, gold, then you can kind of use the 5 minute, not you can use the 5 minute, but when you're trading something more slow and progressive, such as, GBP USD, Euro USD, more of a Forex pair, use the 15 minutes, going to be more accurate, right? So once you come to a blank chart, all you're going to do is you're going to get an indicator called trading sessions. You're going to open that and all it's going to show you is your trading sessions. I have Asian in blue, London in orange, and New York in red. And just to make this clear, this is New York Stock Exchange Open, not New York Open. It's the Stock Exchange Open, 9:30 a.m. Eastern. Okay, and this is going to be a very important time because this strategy you want to be executing on volume times. So what we want to use the session for is to identify session ranges. We want to look at Asian range if we're trading London and New York. And if we're trading New York, we want to look at the London range. So if we're going to enter on a 5 minute, I'm using US 30 here as an example. The first thing we want to mark is we want to mark our range high and our range low. So in this example, we're trading New York here. So what we want to do is we want to mark New York London high, which is going to be here. And then we want to mark London low, which is going to be here. And it's very simple. You look for the session before New York starts, right? And you mark the highest point it reached. And you can do this 10 minutes. You can do this at 30 minutes before New York, an hour, whenever. But the highest point it reached, you mark it on a candle body basis. And the lowest point, and that's your London high and your London low. You can even label these LHLL. And essentially what we're looking to be a buyer above London high and a seller below London low. And there are ways that we can trade from London high to London low and from London low back to London high like this and continue. Those are some juicier trades, but that is an extension of my strategy, which I go more into depth in various webinars that I do in my community. But today I want to give you something that I use a lot of the time and something that is a very valuable setup. I'll also at the end show you a live example. So this is going to be totally clear and clean and simple for you guys to execute on. So what we're looking for is, like I said, buy above London high, sell below London low. But how are we going to actually execute on this? Before I talk about that, I want to show you exactly how that concept works. So in this case here, which is why I want to show you this example, as we can see, we got below London low, but there was no continuation because the sell of that session was from London high to London low. This doesn't mean that you can now excuse for more entries, right? So I'm trying to make this clear. Otherwise, people are just going to randomly sell London low. Oh, it doesn't work. Of course it doesn't work because you're selling after huge candles. That is not going to be a good idea, okay? But in this case, plan would have been above London high for buys. London low is far, so you rather trade to it, okay? That's why I'm showing you that. Now, if we take this example here, you can see how we have a nice London high up here. London low is down here. And we close above London high, get beautiful continuation structure before. But this is very effective. You just taking this entry is one of the best entries of the session. Anyone tells you otherwise, you need to mess yourself up in the range. Why get caught in this when you can simply just take a buy above London high and happy days? So if you haven't guessed already, what you're looking for is you're looking for a close. A close on the 5 minute time frame above your London high or a close on a 5 minute time frame below your London low. So this is an example I want to show you. As we can see, looking for two potential buy options here, and this is that buy above the London high. So we're going to run through this trade from the beginning and just speak about it. So I've just hopped onto a simulator here to make this super clear. This is your London high. London low was down here. So we're not really interested in London low. The number one thing about this strategy is we kind of want to be following trend, right? You want to have other things that can help you, such as bias and having trend. This is all going to make things easier. You don't really want to fight trend, right? Use some common sense in the market. It's going to help. But to focus on what the actual entry strategy is we want to be buying above London high here. But obviously this is not next to the open, so I don't really have a trading time here. Plus this is one big candle here. So for me to enter this close above, I would need to put stops 141 points. That's a big stop loss. Instead, what I want to be looking is I want to be entering in something like this, the continuation play. So what's very important is we develop a range, okay? If you've been watching me for a while or subscribe to my channel, so make sure if you are staying in the video till now, leave a like and subscribe. It really does help my content that I put out for free for so long. You can check my channel. There's so much value on there. That's all for free. But going back to this, we want something like a setup one. So that's why those who've watched me for a while will have heard of the setup one. It's a very popular setup. And the reason why we want to set up one is, and one of the rules is we need a range. So a range includes having a resistance and a support, and we need a close above that. Obviously, we had a big push here, so we need to rely on volume on a day like today. But this is my point. If you're coming to the open and the push has done this without a structure, you're not buying. Just don't buy. You're late. The move is gone. It's okay. Move on to your next trading day. Does not matter, or your next setup, whatever. Doesn't matter, because we are not here to chase the market. We're here to trade the market, okay? But in this case, we got a structural point where most people get faked out here, just trying to buy too early, came back, pull back, create structure, and now we get a close above. So what we need the next candle to make a bottom wick, break the high. In this case, I like to go break of highest high as always, because break of highest high is going to kick. We're going to put a buy stop example here, and we want to go break of this highest high here. Stop loss goes below the range. We want it below the support. You can get away in some cases below the actual candle low here, but it's not something I recommend always. And there's a certain rules behind putting your candle below the lowest low here. But in terms of that, this is what we do. We put something like this, boom, buy stop placed. And then all you have to do is wait for bottom wick candle to break the high, and we're ready to go. So let's go see how this looked. Let's play this here. Wait for the candle open. That's the candle open, bottom wick made, and now you're waiting for break of high. So let's speed this up so we're not waiting. Now we get triggered, a little bit of drawdown, and once the volume kicks in, you can see that drawdown just retesting the previous level, and boom. So that was a trade I actually took there. Was a pretty nice trade at that as well. And there you go. Pays you nicely, easy, more than 1-to-1, and happy days. As we can see, that's the day I actually took the trade here, and yeah, I was very happy with that trade. So that is the exact strategy and a breakdown in short term. So hopefully that you guys enjoyed this video and you found it useful. Nice little rundown, something that you can use and apply quickly. Very simple, straightforward, but effective. Let me know in the comments if you want any other specific videos, and just leave a subscribe to the channel, and join us for more videos, man. Join the live streams. You know the drill. That's all I have to say. Much love. Take care. Trade sharp, and hopefully catch you guys very, very soon. Peace.